Um, Good morning and welcome to the HKGFA webinar, Financing the Transition to Lower Carbon Emissions and the Role of Sustainable Finance. The webinar is organized by the Hong Kong Green Finance Association, Green Bond and Product Innovation Working Group and co-hosted by Societe Generale. My name is Jenny Lee, the Under Secretary General for HKGFA. We have a full agenda today, and before we kick off, a few housekeeping points to note. So this webinar will be recorded and will be available on YouTube. If you have any questions that you would like to ask the panelists, please do post them onto the Q&A box below. And at the end of the event, there will be a polling where you will need to complete this if you'd like to claim your CPT record. So in the next hour, our speakers will discuss the impact of carbon-intensive sectors on greenhouse emissions and how these sectors can be decarbonized and the sustainable finance products available to help them make this transition. With countries and central banks committing to net zero targets, high-emitting sectors can no longer afford not to take action. There is public and regulatory pressure to reduce the dependency on fossil fuels, and borrowers from brown and black industries will find it harder to access traditional funding for their business operations. High-emitting sectors such as the shipping, steel, and chemical sectors will need to start the transition now, and sustainable finance products such as sustainability-linked bonds and sustainability-linked loans can help finance the decarbonization, which will cost an estimated $1.6 trillion a year, or 1.9% of 2019's global GDP. In 2021, the total global sustainable finance issuance reached 1.6 trillion. Sustainability-linked bonds and loans saw the fastest growth, with an increase year-on-year of 4 times its volume to $570 billion, representing 27% of the total issuance. These products are popular with borrowers from hard-to-abate sectors, as the use of the proceeds are for general corporate purposes, such as energy efficiency, water consumption, employee gender diversity, which may not be traditionally labeled as green, but then it supports a shift in the corporate culture towards long-term sustainability and a carbon reduction emissions pathway. So the borrower commits to meeting predefined ESG performance targets and will receive a discount on the interest rate margin if they meet these KPIs, or a step up in the coupon rate if they fail. In addition to these products, we are beginning to see the emergence of transition bonds, where borrowers from these high-emitting industries can also finance a transition towards less carbon-intensive operations. However, there's only been a handful of these issuance globally, primarily because of the lack of clarity on what can be considered for financing under this transition label, and growing concerns of greenwashing and continued financing of high carbon emitting activities that are not aligned to the Paris Agreement. Work is in progress, however, at the G20 working group level to develop a transition financing framework, which is anticipated to be released later in the year. With that, I will now pass the floor to Ronald Young, Director from Societe Generale, who will be moderating the panel discussion. Ronald is part of the Sustainable Finance team in Asia Pacific and the Global Impacting Structuring team, primarily responsible for origination and structuring of mainstream sustainable finance solutions, such as green, social loans, bonds, and securitizations, as well as sustainability-linked financial instruments across industries in Asia Pacific. With that, I'll hand the floor over to you, Ronald. Thank you.
Thank you, Jenny. Hi, hello, everyone. It's very good to see everyone here. I have the pleasure to welcome the 3 speakers on the panel. We have Matt Boyce, who is the Treasurer and Head of Capital Markets of Atlas Corporation. And we also have Jeanette Liang, who is the Credit Portfolio Manager, Asia Fixed Income, Head of Credit Research for Onshore China at Schroeder Investment Management Shanghai Limited. And we also have David Ho. He is a Sustainable Finance Analyst at Moody's ESG Solutions. So welcome to all the speakers. So why is it so important to accelerate decarbonization, particularly in the carbon-intensive sectors? The Intergovernmental Panel on Climate Change, also known as IPCC in short, is the United Nations body for assessing the science related to climate change. Every now and then, and they have been doing it for 20 or so years, the IPCC issues a comprehensive assessment report. Their latest report, published recently, is not very optimistic about the world's current decarbonization efforts. The Paris Agreement calls for global GHG emission to peak before 2025 by the latest in order to limit global warming to between 1.5 and 2 degrees Celsius by 2100. But we are still a long way from getting there. Besides, based on the existing policies and regulations, peaking of emissions is projected to occur well beyond 2025, and global warming is expected to rise to 3.2 degrees by 2100. So it is much warmer than what is called for under the Paris Agreement, and there'll be profound consequences for the ecosystem. To get to where we need, it is important to accelerate decarbonization in the highest emitting sectors. And amongst those sectors, transport is a challenging one, given that growth has not slowed and remained roughly the same over the past decade. So let me turn to the panelists for their insights and perspective. So shipping is critical to the world's economy and essential for international trade. And it is also a meaningful contributor to transport sector's carbon emissions. So can I ask you, Matt, being a key player in the shipping industry, what are the key policies and regulations taken by international maritime organizations and other key national regulators in terms of incentivizing and then pushing the industry to decarbonize?
Thanks, Ron. Yeah, there's been a number of initiatives from global and regional players. So from the IMO, which is the kind of global regulator for shipping, there was the IMO 2020, which wasn't directed toward carbon or decarbonizing the industry, but reducing the sulfur content of fuels and improving the overall emissions. That was say a first step. And then the IMO has targets for 2030 and 2050 to reduce carbon intensity by 40 and 70% versus a 2008 baseline. So those are pretty serious targets that the industry's been working ever more quickly to find technology and build a supply chain to tackle. And then you've also got regional bodies like the EU that have been stepping in with their own initiatives or incentives. The most topical at the moment for shipping, while lots in conversation, is the addition of shipping to the EU ETS in 2023. So that would mean that the shipping industry needs to go out and start buying carbon allowances or EU allowances, and basically puts a price on carbon going forward for the industry. So that's pretty meaningful in dollars and incentives. And then banks and other stakeholders outside of the regulatory landscape have put in place their own initiatives and incentives, like banks have put in place Poseidon principles like yourselves to incentivize shipping companies across the supply chain to kind of do the right thing. So there's quite a broad array.
Yeah, thanks, Matt. So, to capture the incentives and then to realize the targets, basically, there'll have to be the appropriate technologies to make that a reality. So, what are the key technologies available to decarbonize shipping? And then can you give some comments on their feasibility, commercial viability, and the rate of market adoption?
Yeah, for sure. And that's a tough one that I think that a lot of these are very much live topics that the industry is working towards. Right now, you really just have in any sort of scale LNG as an alternative, which is say a 25% base case 25% reduction in carbon. If you blend LNG with and make bio LNG or other forms, you can dramatically reduce the carbon emissions coming out of that fuel. So that is a likely, we think of it as a transition solution. I think the industry thinks of it as a transition solution, but that does have pretty long legs as you start blending it and improving it. And then there's also engines being developed now for methanol and ammonia. There's a small amount of methanol vessels on the water today, and a small number being built, like Maersk is building a few. And then ammonia is viewed to be the likely longer term solution, but technology still I'd say nascent for that, and the infrastructure required around the supply chain is still nascent as well. So we'd say we think about it as a 10 to 15 year time frame for something like ammonia to come in scale. And that's just there's so many steps remaining besides agreeing on and developing the technology for that alternative fuel. The infrastructure needs to be built to deliver the fuel. The supply needs to be developed. The vessels need to be built to retrofit, and the chain in between those steps also needs to be built out. So it's a pretty global, it's a pretty massive global infrastructure change that will definitely take some time. And maybe some of the incentives and disincentives we talked about could help to speed up that process.
Yeah, so I think obviously like some technologies are more transitional in nature, and the other technologies are basically long-term, but it will take some time to develop. So in terms of your company, like how has your company been doing in terms of like investing in these technologies to decarbonize your fleet?
Yeah, we've been actively developing our decarbonization strategy, and it's it's a good point. It's almost everything is transitional. 10 years ago, we came out with fuel efficient vessels, our saver vessels we call them, which is just improving the efficiency running on conventional. We're now moving to further fuel efficiency improvements on a small level that can be gained through bulbous bows, paintings, etc. But the more meaningful stuff, we're building 25, actually about 30 LNG vessels today, which they'll be dual fuel LNG, so they can run on conventional or LNG to give them greater ability, greater flexibility in which ports and where they can go and across the globe. So that's a big one. And then we're building all of our new builds to be, or many of them to be ammonia ready. So that's not that they can run on ammonia day one, but that they can be retrofit at some time in the future. So those are some of the steps we're taking in conjunction with conversations to see how we can move things along quicker. We're also part of the Maersk McKinney Bowler industry partnership, several other industry partnerships that are working toward the same goal of what is the future and how can we get there.
Thanks, Matt. So it's very interesting to see the balance between short, medium, and long term. Yeah. So shall we turn to the investors' perspective? Jeanette, as investors, how do you view companies in the carbon-intensive sectors? What are the key areas you look out for when considering an investment in such companies? And can you take an example to illustrate how you typically evaluate a carbon-intensive company?
Okay, good morning, everyone. Thanks for the panel invitation. Firstly, at Schroders, we are a net zero asset manager, and net zero transition is very important to us. And we formally validate our targets by the Science Based Target initiatives. So what this means is that our emissions targets are in line with climate science and the Paris Agreement goals. So this target does not include only our own operations, but also as well as our finance emissions, which is the emissions arising from the companies we invest in. So for considering an investment in a carbon-intensive company, I think the first thing we do with our investment is to firstly to ascertain if the company has a sustainable business model. And ESG integration is embedded in our culture and investment process. And we really look at active ownership with Schroders' proprietary toolkit to assess our investment climate risks. And this proprietary toolkit, it's called Impact IQ, includes our set of tools that measures the impact that companies have on society and the environment. And it's used as part of our investment process. It also examines the externalities of the companies, the risks the unsustainable practices pose to their businesses, as well as their alignment to the UN SDG goals. I think we believe that sustainability is making about a positive impact with everything we do. So we have toolkits like SustainX, which helps to translate the social cost of a company into financial costs, and also Carbon VAR, which measures the impact of rising carbon costs on a company's profitability. This focuses the company's business models and the profit drivers rather than just purely environmental measures. So with this, we actually take a very forward-looking approach on a company's actions rather than just their present-day carbon intensity. So maybe a majority of our portfolio emissions actually come from a small portion of our holdings. I think it's quite easy to say that, oh, we can just do exclusions and we just decarbonize our portfolios by switching out of these sectors. But that doesn't really help our clients achieve a broad diversified portfolios. Or nor does it help system-wide carbon decarbonization. So for us, our key approach to net zero transition with our investee companies is climate engagement. We have a climate engagement and escalation framework, which sets out how we will use our influence as investors to help drive the transition to a low carbon economy. What we do is that for our companies that we invest, we have active ownership and we have a climate engagements, which we communicate our high level climate expectations and escalation approach to the companies. So we have commit, set, publish, and report. By commit, we get companies to commit to decarbonize their business models. We ask them to set targets covering their scope 1, scope 2, and relevant scope 3 emissions. Publish, to publish a detailed transition plan on how they will transition and meet their targets. And report, to report on performance on progress annually. This active ownership with climate engagements helps the company we invest to move the economy as a whole towards decarbonization. I think at Schroders, we also offer a spectrum of sustainable strategies to asset owners who also wish to accelerate their capital allocation decisions where they think they can be a systemic effect.
Thank you, Jeanette. This is very comprehensive. So noting that you not only take into account current carbon emissions, but then also look into the future pathway for companies. And then also you're affecting a lot of other ESG considerations and then using a lot of toolkits. And then engagement is also key for your approach. So maybe let's spend some time on decarbonization strategy and target setting. So both at the corporate level and at the sustainability linked instrument level. David, can we please start with you? And from an SPO provider's perspective, when you evaluate the carbon strategy of the issuers and borrowers, what are the key areas of focus?
Okay, thank you, Ronald, and good morning, everyone. So when we are evaluating the decarbonization strategy of the issuer or borrower, as a SPO provider, we would focus on assessing whether the strategy is aligned with international standards or treaties, and whether targets are science-based to determine the quality and ambitiousness of the strategy. So for example, we will see how does the issuers or borrowers justify that their business is aligned with the Paris Agreement and the IPCC recommended mitigation pathway consistent with limiting the warming to 1.5 degrees Celsius above pre-industrial levels. So for the issuers and borrowers, they should also demonstrate that their decarbonization target can follow framework and methodology approved and even certified by expert organizations such as the Science Based Target Initiative, SBTI, which require companies to make rapid and deep emission reductions through both near and long-term science-based targets. And an issuer will also need to show that it meets requirements set out by the SBTI and ideally has received SBTI validation. Thank you.
Thank you, David. So yeah, it's very clear basically when issuer issue targets, basically they need to follow a certain trajectory. And apart from those trajectories or science-based validation, what else do you look for in order to demonstrate ambition from the client's target? For example, like do you actually look at like maybe a peer comparison? So comparing them with peers or etc.
Okay, so I think the issuer and borrower needs to carefully balance the ambition with feasibility when selecting KPIs and SPT in their sustainability-linked instruments. It's very important that their target should be based on a clearly defined pathway and robust assumption. We believe interim goals, historical KPI performance, science-based criteria, and transparency on scope and coverage in the case of greenhouse gas emission, and limited reliance on offset can all strengthen the credibility of targets. So our SBO methodology basically follow a 3-layer benchmarking analysis to determine the ambitiousness of the SPT. The first one is we evaluate the ambition of the target compared to historical performance of the KPIs. So the selected target should demonstrate an ambition when compared to its own performance, compared to the target baseline, and go beyond business as usual scenario. So for example, if the target baseline is just 40% in 2015 of renewable energy generation, and the target for 2022 is 45%, then the target is not considered very ambitious. We believe the target should represent a material improvement in the respective KPIs and be beyond business as usual trajectory. And the second one is about the compared to the sector peer performance. So the selected target should demonstrate an ambition compared to sector peers performance. So for example, if the 3 top performers of the company's sector disclose a target of, let's say, 20% greenhouse gas emission reduction by 2022, and the selected target is to reduce by just 5% its greenhouse gas emission by 2022, then the target is not ambitious from our point of view. So lastly, we also assess the ambitions of the target compared to sector standards, objective, and targets. So the selected KPI should also demonstrate an ambition compared to international or regional or national sector standards and objective. So for example, if according to the Paris Agreement, greenhouse gas emission should be reduced by 50% by 2030, and the company's target is to reduce greenhouse gas emission by just 10% by 2030, then the target is not considered ambitious. Thank you.
Okay. Thanks, David. So it's very helpful. So I'll also like to have the corporate perspective in terms of setting targets. So Matt, your company has corporate level targets, and we know you have raised multiple sustainability-linked instruments, including sustainability-linked loans, sustainability-linked bonds, and sustainability-linked derivatives. Would you please share your experience in establishing those targets, both corporate and sustainability linked instrument level? And were your considerations similar to those highlighted by David?
Yeah, definitely. And I think the considerations were similar to those David highlighted, but maybe much more of a focus on what is the right KPI versus how ambitious should our target KPI be. So we've pursued a number of avenues over the past few years with sustainability linked structures, and whether they be loans, bonds, transition bonds, and some of those have been oriented toward a set of KPIs, and some of those have been linked toward CapEx spend. So it's different purposes depending on what the timing is, what we intend to raise capital for the purpose of. So for our first sustainability linked loan financing, which was about 2 years ago now, we got together a cross-functional team our operations, commercial projects and technology, et cetera, with finance, to all discuss what the right KPI is. And we wanted to get this right. So we spent a lot of time on it, and debated different views of the future, et cetera. But once you have a KPI set, it lives with you for the length of the financing at the very least. And you want to be able to kind of rinse and repeat. So once you have a good KPI, you can kind of use that through time. But I think most importantly, once you have a KPI, it's not, I think this point is missed often. The KPI isn't just relevant for your company for that financing, and you don't think about it otherwise. You generally want a KPI that your whole business can kind of orient itself around, and that you're all going to be focused on and striving toward. So our first sustainability linked loan, we picked two KPIs. The first was based on the emissions of the vessels, which was a metric that we were able to measure as of, I think 2020 was the first year we measured and reported it. And the second was taking a supply chain approach. So we would reward our customers for how they behaved, if they had good actions, or if their behavior reduced the emissions of the vessel, we would reward them through a sustainability linked lease. And the financing would reward us for how many of those we put in place. So it was effectively like a pass down of rewards, but it also aligns the industry together well, because a lot of the emissions that come out of C-SPAN, for example, or Atlas, whether positive or negative, are not necessarily the result of our actions. They could be the result of other stakeholders. So we need to bring that all together. And we've replicated this structure on subsequent financings. We've done about 4 billion in sustainability linked or green bond financings to date. And one other financing we did was linked to the green bond framework, and it was titled a blue transition bond, but based on Kpis being used toward LNG vessels. Right, it could be any carbon mitigating technology, but we used it for building out LNG vessels.
Okay, thanks. Yeah, that's very interesting. So we can see a lot of thoughts have been put into coming up with the targets, and then also choosing the type of instruments to finance. And then we also understand like there are lots of considerations, internal discussions involved. So maybe from a practical aspect, like, obviously when you did the first transaction 2 years ago, it was something new to the company. So what were the key external and internal challenges, maybe before like 2 years ago when you came up with the first transaction, and then like how did you overcome those?
Yeah, I think the internally it was time consuming and difficult to but kind of fun and creative. Bringing together a team that isn't usually brought together for things like this was difficult to get everyone engaged and aligned on what we were doing. But especially as we later formed an ESG committee, it's sort of set in motion a lot of positive, a bit of a positive feedback loop, and a lot of actual improvements outside of just the ESG lens. But bringing these teams together has helped us share ideas more, that we weren't spending as much time together sharing ideas as we are now. So it's brought a lot of positive change, but is a challenge to get going at first. And then externally, I think the biggest challenge, which really a lot of carbon intensive companies face, is that you're viewed as investors are coming along, and Jeanette seemed to be pretty progressive in her views. Some investors have the view that you're either green or you're black or brown, but they don't have an appreciation for the transition. And so explaining to people that we're not putting this capex, or we're not putting this capital toward net zero assets, where these are going to be carbon producing or carbon emitting assets, but they're just going to be better than what's existing today. And we're going to slowly transition along this pathway as technology and infrastructure becomes available. That was difficult. Many get it and many don't, and it's hard to change minds.
Mm-hmm. Yeah, thanks, Matt. So it's very insightful. So we've talked about targets and sustainability linked instruments, and Matt, you have touched on like the use of proceeds instrument that you've raised and the necessary capex to transition or decarbonize shipping. So maybe we can also spend some time on use of proceeds instrument. So maybe from an investor's perspective. So can we start with Jeanette? So what is the typical process that you use to evaluate sustainable finance instruments, for example, green bonds?
I think before we look at evaluating the instrument itself, we always go back to the fundamentals of the company. It's important to evaluate the company on its fundamentals, its ESG strategy, and its direction, and also its carbon transition plans. So we look at the green bond, or let's say a sustainable linked instrument, or your ESG bonds, as more of a formalized financial commitment for management throughout the length of the bond, as they do have for sustainable SLBs, sustainable linked bonds, they do have certain incentive or penalties for meeting these targets. For green bonds, we look at the green bond financing framework, as well as we scrutinize the use of proceeds. We want to see commitment and also specific use of proceeds that it's going towards viable or like meaningful projects. And for sustainability linked bonds, we assess their key performance indicators and whether these sustainability performance targets, they are climate aligned and also SBTi approved. And also then we look at the incentive and penalty type and cost. So again, referencing to what the other speakers also have mentioned about the ambition level, it's not just to set a target and say that if we reach this target, we will achieve, we'll get this like coupon step up or a reduction. It's important to also examine the level of ambition that the targets are set to their current baseline. We also take into account how the company is doing versus their peers and the ambition level versus their current trajectory. We use our positions as investor to actively engage the companies, sometimes before the targets are set, to have a discussion on what we think is a reasonable and ambitious target. And then this is also our active ownership and climate engagement approach towards investing. And post-issuance, we'll continue to follow and monitor the use of proceeds and progress with achieving these targets. So when the company comes around the next issuance, then we are able to see that, how have they progressed, whether they are on their way to meet these targets. It's not just a one-time thing, but we see this as a relationship and partnership with the companies that we invest in.
Okay, thanks, Jeanette. So yeah, it is very comprehensive in that, like basically you not only look at like the user proceeds, where the money would be spent for green instruments, or sustainability linked instruments. You don't not only look at the targets, but then you also actually start with the company strategy and then look into deeper. So maybe we'll get the SPO perspective as well. So typically for market instruments, there'll be a requirement for an SPO for green bonds. So maybe let's ask David about his perspective. So how do you ensure the greenness of investments and the associated environmental benefits? And would you have to look at like technical screening criteria for certain types of investment to determine how green those are?
Thank you, Wano. As an SPO provider, we will assess whether the criteria of the eligible category are defined in accordance with the internationally recognized green taxonomies. For example, the technical screening criteria of EU taxonomy and also the CBI taxonomy. So if the criteria are well defined based on this international standard, we will be able to ensure the greenness of the project to be funded. So, and also according to ICMA green bond principles, it encourages a high level of transparency and recommends that an issuer's management of proceeds be supplemented by the use of an external auditor or other third party to verify the internal tracking method and the allocation of funds from the green bond proceeds. So as a Moody's, we go one step further by also assessing whether there is a feasibility on external verification of environmental benefits and impact until bond maturity or until end of payback period of loans in line with best market practices. So we believe such external verification will provide assurance that the environmental benefits of the green investment are always taking place. Thank you.
Okay. Thanks, David. So external verification is clearly very important from your perspective. And so maybe like from your experience, like what do you see are the most common and credible eligible categories for the use of proceeds for green bonds? And do you differentiate the greenness of different types of investments and associate benefits? Because sometimes like some assets will be more clear-cut to be green, but some other assets are maybe less clear-cut and subject to a technical screening criteria. So how do you usually do that?
Okay, so I would say currently most proceeds of green bond and loans go to climate mitigation categories such as renewable energy, green building, clean transportation, energy efficiency, and pollution prevention and control. So according to environmental finance bond database, over 30% of proceeds of green bond issued last year go to renewable energy, and then 20% to green building and 15% to clean transportation. And in the future, we believe that the increasing frequency and severity of extreme climate events will heighten the need for adaptation and resilience financing. So while very little financing has gone to this project at the moment, with just 3% of green bond proceeds allocated to climate adaptation project in 2021. But we anticipate this funding will grow as the risk demand greater financing for this project. So actually all green projects do not necessarily have the same level of environmental impact. So as an SPO provider, we integrate a 4-layer impact analysis for each eligible green category. So our impact analysis basically assess the 4 key components. The first one is relevance, the relevance of the project to respond to key environmental issues of the company. We will check if the project is responding to the most important environmental issue of the sector. And the second one is the scope of the positive impact claimed by the project. We will see, is the project having a systemic positive impact? We will assess if the project can bring positive impact to all of its relevant stakeholders, including the issuer, its supply chain, and local and global stakeholders, for example. And the third one is magnitude and durability of the solution proposed by the project to solve the claimed environmental objective. So what is the project doing with regards to its overall impact? So if the project can reduce the negative impact, but it continues to have lock-in negative impact, or the project is just compensating the negative impact of the issuer, we will not consider that project is really bringing environmental benefits. So however, if the project can prevent or avoid the creation of new negative impact related to the claimed objective, then our opinion would be very positive. And the final one is technical choice. And what is the technical choice of the project? We would like to know if the project is the best alternative available in the sector to contribute to the claimed objective and benefits of the project. So basically, we assess the expected environmental benefits of the project on the basis of these 4 components. Thank you.
Thank you, David. So obviously a lot of considerations have to go into that. And then basically not only like just superficially what is the immediate benefits, but then we also need to look at like what are the potential negative benefits or lock-in effect for the comprehensive evaluation. Yeah. So thank you. So I'm conscious of time, and then I think we want to leave some room for questions from the audience. So maybe let's try to some questions. So there's a question is for fund managers. So I guess maybe that's a question for Jeanette. So how does your fund measure the success, the effectiveness of your climate change engagements, or assess the actual company's target achievements? Do you measure the emission level of prior and post engagement of the company and your portfolio?
Okay, I think that question probably answers itself already. So in our climate engagement framework, we do have kind of a measurement targets, so before and after. And then also the progress of the companies, not just when we say engagements, it's not just only specific to just climate issues, but also there could be other issues that we engage a company in terms of a corporate governance and social. So we formalize these engagement records and then also conduct them periodically to engage the company to see where we are with the progress. And if there's a need, then we could highlight to the company in the need of to escalate some of their actions.
Okay, thanks. Yeah, so and then there's another question. So it's for SLB, does the amount of coupon step up, step down actually matters? From a lender's perspective, can a higher coupon step up, step down indicate level of ambition of the borrower? So yeah, for this one, maybe I'll try to start, and then maybe I'll then ask Matt about like his experience like dealing with the financier on these aspects. So you know, as a financier, like we want to see meaningful step up, step down. Basically, that will give a real incentive to the company to achieve the sustainability targets. But then we don't actually judge like the ambition by the coupon step up, step down. So when we judge the ambition, we basically follow the framework that typically SPO will adopt. For example, like we look at like does the trajectory align with, for example, international standard? Is there science-based validation? And then also how does that compare to the peers and the historical baseline? So these are the primary considerations. But again, we would like to see like some meaningful step up and step down. So basically, people know the companies will be properly incentivized. So maybe I'll turn to Matt and see like what he feels when he negotiates with like financiers. Does he feel like this is the driver or something else?
Yeah, it's an interesting question, and I'd say, you know, you don't want it to be too small where whether you succeed or fail is kind of irrelevant to you. That gets into a bit of a are you greenwashing question. But I don't think the size of the coupon step up or step down matters too much. Like if it's too large, it's a little imprudent. If you have an ambitious target, you're not necessarily going to want to bet your company on it. So I think it's just a component. You don't want it to be too small, but being large doesn't really do much. It's more about what the target itself is from KPI.
Mm-hmm. Yeah. Okay. And thanks. And that's another question actually is for specifically for all the speakers. So it's addressed to all the speakers. So what are the main challenges from your perspective for opening up sustainable finance for decarbonization projects? And what would you suggest could be done to alleviate said challenges? It's a long questions. Maybe I'll basically stop here and let the speakers chime in. first, and then I'll finish it with a second part of the question. So I guess maybe start with like, what are the main challenges from your perspective for opening up sustainable finance for decarbonization projects? And what would be your suggestion? Could be done to alleviate the said challenges?
I think one of, if I could take that, one of the main problems from my perspective is alignment across industries on what is a green financing. So if you've got a carbon intensive industry that wants to do transition financing or sustainable financing for a transition project, it's difficult for them to know what is considered green or sustainable, and to align with investors and SPOs, et cetera, to figure out what that line is. So I think better understanding maybe within industries, and it's a difficult problem to solve. Do you let the industries figure out for themselves what is ambitious or what is a benchmark, and everyone else follows? Or do you let investors or SPOs determine it? I think that's kind of one of the biggest challenges I see.
Okay. So for Jeanette and David, any thoughts on this one?
I think the other challenges that we face is also data disclosures in terms of ESG data. So some of that it's not really harmonized across companies, so it is very hard to compare sometimes. We also would like to see whether the targets are actually set by companies are actually validated by the Science-Based Target Initiative, because this at least gives us an idea on whether these companies' ambitions are actually validated by science and align with the Paris climate. I think the other challenges is also, as ESG is just really starting, it's also investor education, where investors also need to start learning about the science behind the companies and climate science as well. So investor education seminars such as this, it's quite helpful to get the industry up to speed as well.
Okay. Thank you. So David, any thoughts on this one?
Yeah, I basically agree with Jeanette saying that the data availability and the reliability is a key challenge at the moment for decarbonization projects, and particularly for the scope 3 emissions, because in APAC, not many companies in APAC, they have scope 3 emission data. So we always feel difficulty to do the benchmarking and also do the to calculate the scope and coverage of the KPI because of the missing the scope 3 emission data. So I believe it may need some time for the companies, especially in the APAC, to just to consolidate the data for the scope 3 emission.
Okay, thank you. Yeah, so here is there's the next question. So what are the incentives for the issuers to meet the ESG KPIs other than coupon bonus or penalties? So maybe this is a question for a company, a corporate that has raised SLL and SLB. So maybe Matt, would you like to take this one?
Yeah, for sure. So I think the incentive, the quantifiable incentive is the coupon bonus or penalty, but the other incentive is that once you determine what your KPI is and you align your company with it, it almost has a bit of a life of its own. It's kind of like if you start counting, how many water bottles you drink in a day, you're going to drink more. So once you start counting and caring about that, the whole company is sort of internally incentivized to meet and overachieve those targets. So it's a bit intangible, but I'd say that's a big intrinsic one.
Mm-hmm. Yeah, and I'll add my experience as well. So most of the time when I talk to companies, I think for doing this kind of structure, is the bonus and penalties is not the primary considerations. It's actually the main purpose is to drive behavior and then to try to be more sustainable. Okay, so thanks for the question. So any other questions? Okay, so there are actually no more questions. So and we also coming up to the end of the section. So we'd like to thank HKGFA for the support and help in organizing this webinar to make this a success. And then I'll also like to thank Matt, Jeanette, and David for kindly agreeing to be the speakers and then to basically sharing the insights and valuable perspectives. And then I'd like to also thank you everyone for participating and asking great questions. So thanks a lot for the support, and we'll see you next time. Thank you.
Thank you.
Thank you.
Thank you.